Hey everybody, sorry, didn't see you there. I was just thinking that I would today talk to you about the very next system I traded after trading those moving average systems. If you missed that video yesterday, go back and watch that now. Otherwise, here comes the next video. Giddy up. And welcome everybody, Rob Booker here, best-selling author of blah blah blah, blah blah blah, and blah blah blah. Trading by Faith, Adventures of a Currency Trader, 51362, Strategy 10, and many other world famous. Okay, let's just get on with it. Okay, so after I traded with these moving averages, one of the things that I moved on to, and it was probably immediate thereafter, and I traded this for about 2 years, was a simple method of support and resistance trading. Now, for those of you that are unfamiliar with support and resistance, it's basically the most popular, okay, I don't even, I'm just blabbering now. Let's just get right into it. Let's just not bother with any of that garbage. I don't know if it's the most popular. So it was popularized in this book. Edwards and McGee, I always call them Edwards and Magoo, wrote this book, Technical Analysis of Stock Trends. And this is the most famous book ever written about the technical analysis of stock trends. And you can just look it up on the webs. Analysis of stock trends. You can probably find a PDF, but let's not steal people's life's work. And this is the book right here. So it's in its like 10th edition now, but there's a bunch of editions of this book. And here, let's zoom in here so you can see this a little bit better. So that's the book right there. And that book is the most influential book on support and resistance trading ever written. But I actually prefer a different book. It's Martin Pring on Price Patterns. I actually prefer this book, Pring on Price Patterns. I'll link to both of those books below in this video, or above in this video, or sideways in this video. And now let's stop wasting time and let's go into the essentials of what I did with this method. So these are timeless principles here. So this video may be the YouTube video that survives the test of time and lasts long after my death. That was grim. What I did with this method here was I drew support and resistance levels across price and then kept them on the chart forever. And I'll color them. There'll be dark colored lines here for those ones. And then I would just leave them on the chart. And then sometimes price would break above those levels or break below those levels. And what I want to do here is I just want to draw these levels and I want to show you how I went about doing this. So I would draw some support and resistance levels. And here's what I would do. I would look for areas where price made a low and stopped. There's one. And here's another one. It's pretty simple, it's pretty straightforward, it's not really that big of a deal. And I would draw a line underneath that. Now I generally preferred to see areas where price really made a substantial drop and then stopped. And we'll see some of those examples in a moment. For example, maybe something that looked a little bit like this. Okay, that's not what I meant to do. Something that looked a little bit like this, where there was a deeper move down and then a move back up. That would be a really great area to put a level in. And sometimes when I'd see one of those areas, I'd put a horizontal line in, marking that spot. And sometimes when I'd see a gap level, I'd put a line right at the top of the gap. And my chart would quickly fill up with all kinds of lines, support and resistance levels. And then sometimes price would break below a line. This is Twitter right here. We're looking at TWTR. And you could look at, any financial instrument that you want, oil, futures, stocks, currencies, whatever. And then when one level would break, I would expect that price would go down to or up to the next level in the series. Now, I didn't plan this ahead of time because I think it's more fun that way. And look at that. So price does drop to the convergence of the top of the gap from over here. And then some ancient level that I drew all the way down here. Let's color that red. And let's see where that line originated. Just right over here, this sort of innocuous, innocent-looking level right here came back and meant something later on. And so this led to the conclusion and the statement that I made that, and I like to say this, price is always moving from one level to another. That is the definition of everything that is ever happening on a chart. Price is always in the process of moving from one level to another. And if you can wrap your mind around that concept, it's quite powerful, actually. It means that no matter what's happening on a chart, everything that's really occurring under the surface is as simple as looking for the level that price just broke through or bounced off of, and then finding the level that price is moving toward. And the best thing that you can do is move backward on your charts and start drawing your levels. And what you're going to end up with is an understanding of where price is going next. So we'll continue. So as price moves, what we'll do is we will continue to draw some levels above and below the bars or the candles. So these are two areas where price made a substantial, in this case, inverted V. And what I mean by that is, you could see in each of these areas, it made a V. And, you know, any area where it made that kind of a mark, you could draw a trend line or a level right up against the apex of that area. And you can draw as many of them as you want, and you can draw as few of them as you want. And the beautiful thing about support and resistance is that it doesn't really matter if you drew a lot of them or you drew a few of them, as long as you drew the ones that you did draw at those levels where there was a V or an inverted V, and you drew the trend line at the apex. Now, there are lots of schools of thought on this, but I want to go over a couple of just base principles here. One is trend lines on top go on candles that are falling. So that's what you see over here. The trend line is on the top of the candles and it's falling. I typically do not draw a trend line on top across candles that are rising, typically. We could talk about that some other time when that is appropriate, but for now, let's just 99% of the cases are as I've just described. Trend lines, and you're going to figure this out before I write it. Trend lines, okay, that's not what I meant to do. Trend lines on the bottom go on candles that are rising. So we drew a trend line underneath the candles here that were rising. And a trend line is called a trend line because it forms the barrier of the trend. So if this is a downward sloping trend right here that we're looking at, this trend line marks the barrier of the trend. And if that line is broken, then the trend is thought to have not ended, but be in the process of possibly ending. So price is on the way down and it might be falling lower and lower, or we may turn around now and start to move up. Now, if we move up, it's pretty clear what's going to happen. We're probably going to hit this line at some point and this line right here. And we don't need that many levels, but we're probably going to hit those two lines. I might also just draw one underneath these right here, just for fun. So right there and right here, just for fun. I don't know, I tend to get a sense for this after having done this for 2 years of my life from like 2004 to 2006. There we go. So these levels are going to come into play. So this little trend line that we drew here is going to come into play, and price is going to find that level and shockingly like bounce right off of it and maybe break through, and then it's going to bounce off of the next one higher. And it's these, anytime you see price bouncing or hitting off of something, and it's not on, if these lines aren't on your charts, price is bouncing off a level of support and resistance. And one of the most important things you can do is get your levels drawn. So I like to draw the levels. Here's just a couple final principles as we wrap this up. So I like to draw my levels on a 60-minute chart or a 240-minute chart. I like those two time frame charts for drawing levels. And I actually like taking the trades from the same time frame that I drew the lines on. So if I drew the lines on a 60-minute chart, then I take my trades from a 60-minute chart. And the same is true of a 4-hour chart. I like 60-minute charts for FX, and I will often use a 240-minute chart for stocks. And then for futures, I like intraday trading. I don't really do a lot of that, but I like a 15-minute chart for something like futures, and then you can go for a few ticks on those futures contracts. I hope that this was enjoyable and fun. Don't forget, you can get that little booklet on 51362 and maybe a webinar or two, or a little secret YouTube playlist where I post some more videos about that method. If you click on the link inside this video at the end, you'll go to a page where you can type in your name and email address, and then I'll send you a link to that and a couple of these indicators as well that we use. So grateful that you're here. Thanks so much for being here, everybody. I'm Rob Booker, and I will see you next time. Don't forget to subscribe to the channel if you like the stuff that's going on, or hit the like button. If you don't like what we're doing here, you don't even have to click. You don't even have to click the dislike button. I'll just know that you didn't like it, and then we'll just keep that between the two of us. Okay, bye for now, everybody. Love you all. Have the best day ever.